the informed investor. Thanks to Century 21 agents, defying mediocrity and delivering extraordinary experiences.
Times like these, you need great advice about real estate, whether you're in the market to sell or to buy. The chairman of Century 21 joins us every Monday night. Charles Tarbey, great to talk to you again.
Thank you very much, Steve. And sadly, I'm calling you from Kangaroo Valley, which is a long way from Sydney, because we're going to talk about some regional areas tonight. And I guess you probably know what Kangaroo Valley means.
Yes, golf. So your shoulders first, is it?
Oh, not quite, but I'm giving it a try.
Getting close by
the
Getting close by the sound of it. I'm very, 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 very jealous. We've got the Easter break coming up next week, so I guess the auction market across Australia will come to a bit of a grinding halt for a couple of weeks, will it?
Yeah, it certainly does. It certainly does. But hasn't it been fantastic when you consider the marketplace? It's sort of all over the joint when you look right across the country. But clearance rates for Sydney have been fantastic. They're almost the same as last year. Melbourne didn't do too badly, 58%. But Canberra and Adelaide too, they're just bounding along when you consider that the marketplace is still devastated in some areas. Certain parts of the market are still moving very well. Very strange.
Yep. If you'd taken Charles Tarbey's advice and bought in Adelaide, 3 years ago, you'd be laughing.
Yes, we talked about that. And Canberra, we've talked about them quite a lot, and they are performing very well, and I think we'll continue to, Steve.
So there are bargains to be had out there. There's no doubt about that. If you can get your finance ducks all in a row and get yourself some good spots. But there's a story suggesting that there's some real gems around suburban Sydney. House hunters in a number of areas have been purchasing homes at close to prices last recorded 5 years ago. So you can get a bargain. Whereabouts?
Look, those areas, there's been areas that have been of concern for a while. Some parts of the northwest sector, certainly the Ryde area, has become a real focus at the moment because of what they're saying has been an absolute oversupply of apartments. And then you've got these areas that circle around the M7, whether you're going around Catherine Field, Leppington, those areas. They sort of started growing out of nowhere. People didn't even know they existed. And then all of a sudden, everybody was rushing to get in. I remember warning people about a year and a half ago, some investors, and they said, we found a property out in that area for $1 million. I said, what, a house and land for $1 million? They said, yeah. I said, look, just go back down the freeway a bit and get into Penrith and those areas, and you'll find a property that's not new, that's not fantastic, but it's going to be $300,000 to $400,000 less in value at that time. And I think people raced in a little bit too quickly, again, because of that fear of missing out. And they've certainly overpriced themselves in some of those areas.
One example, and this was a story in the Daily Telegraph, I think it was today, suggesting in Mulgoa, there was a house that was worth $1.39 million in 2017. What's that worth now?
Yeah.
$829,000.
Oh, well, look, Mulgoa is a beautiful area, and it really hasn't come of age yet. It's not an area that I would have gone and bought a home in a subdivision in, because it was traditionally acreage, still a lot of acreage out there. I mean, you've got that property Fern Hill, which that developer Warren Anderson owned. We're talking $20-odd million worth of real estate there. But these are beautiful big properties. If you wanted to buy in a subdivision, I didn't think Mulgoa was ready yet, and I still don't think it is. I think in the next boom it might be, but if people went out and bought there hoping that they were going to ride on the capital growth train, they've obviously been very disappointed.
It seems that what developers have done is, and you'd know this better than anybody, they've bought up larger blocks in Mulgoa, bowled the house over and cut the block in half and built two on there.
Yeah, that's right. Look, I cut my teeth out that area, and so I know the Mulgoa area very well. And you go out to Warragamba Dam, they've got little subdivisions there. But it's just one of those pockets that the world hasn't quite reached when it comes to development. But you've also got, and this is the big thing, you've got a lot of locals out there that have spent a considerable amount of time trying to stop even town water coming to some of those areas because they liked the way it was and they didn't want it to change. And subdivision was a big no-no with the local Mulgoa Valley society that fought development for a very, very long time.
You talked about North Ryde. I guess you'd know Meadowbank, where there was a lot of those apartments built. $720,000 you could have paid for one of those about 2 years ago, now hitting around the $650,000, $670,000 mark.
Yeah, and Meadowbank, as you know, is a very big industrial area many, many years ago. And that area right through Meadowbank across either side of the river have had massive, massive development. Again, developers planning for this growth we were going to have, buying off the plan, people looking 2 or 3 years ago thinking, well, I'm going to get onto this. And here we are again. We've got this situation happening in parts of Sydney that you have in parts of Brisbane very strongly, parts of Melbourne strongly. I think if it's good real estate, Steve, it'll hold. But when there's a bit of an oversupply and the investors are gone out of the market because of the, and I always say it openly, Royal Commission into banking has had a massive impact. Developers were belted up, investors were belted up a year ago. They were pushed out of the marketplace. They are needed right now. And of course, with talk of negative gearing being removed, that's not helping either. And I think there's a lot of issues out there that need to be resolved before the market starts to settle back down again.
Another interesting trend identified by the telly is that young women are more likely to be purchasing a house than young men.
I did read that, and it's really fantastic.
Is that your experience?
Yeah, I hate to say it. I hate to say it to my fellow man, but the ladies are far more organised. They're far more structured, and when they understand what they want, they're organised and they can get on and do it. We blokes have a tendency to struggle a little bit, and it was always a bit of a male domain years ago. We get out and work, and especially in my younger day, you go out and work and you buy the house. But there are a lot of professional people. If you came to my floor in Sydney, Steve, I can guarantee you 80% female, and they are not people that I'm talking about who are just doing administrative work. These are people who have senior roles in my business, and they really make a lot of decisions. And I think that is a changing world out there, and I think it's wonderful to see it happening.
Yeah, it is. It's fantastic. And they are more organised. They tend to save more.
We're going to have to start targeting that market a lot more, I think, Steve. The blokes are getting a bit lazy.
Big tip for Century 21. Start targeting single women, Charles. Always a pleasure to catch up with you.
Yeah, thanks for that tip. Thanks,
talk to you next week. Charles Tarby there. Yeah, that ABS data reveals 60% of women live in homes they own compared with just 56% of men, and single female applicants outnumbered single men 2 of the past 3 years according to Mortgage Choice. Very interesting. Mortgage Choice.